Are you really prepared for what's coming next? Because what I'm about to reveal might completely change how you look at your money, your investments, and even your financial future heading into 2025. The Iraqi Dinar Revaluation is no longer just a rumor whispered. Among currency investors, it's becoming one of the most discussed and closely monitored global financial stories of the decade. Before you scroll away or skip this video, hear this out carefully. Inside sources and recent banking developments have started pointing to major restrictions, policy shifts, and insider alerts from U.S. banking institutions, especially Chase Bank, that every potential dinar investor should understand right now. This is not financial advice, but it is a wake-up call for anyone who's been watching the Dinar RV conversation build over the years. The signs are louder than ever, and the patterns we're seeing in both U.S. and Iraqi financial behavior are aligning in a way we haven't seen since the last major currency stabilization attempt. So let's break this down from the ground up, starting with what's happening in Iraq's economic structure. Over the last 12 months, Iraq's central bank has been aggressively trying to stabilize the dinar by tightening dollar auctions, controlling the flow of U.S. currency into the local market, and strengthening ties with international banking partners. These are not random moves. They're calculated steps toward creating a controlled environment for value realignment. Now, this doesn't mean an overnight revaluation, but it does indicate Iraq's attempt to meet global compliance standards and strengthen international confidence in its monetary policy. And guess what? That's exactly what major institutions like Chase Bank and Wells Fargo are watching closely. Reports suggest that Chase has begun internally reviewing how to handle potential currency conversions if the RV event does occur, meaning they're preparing frameworks for compliance and reporting should any revaluation happen in the near term. While this isn't a public acknowledgement of the RV itself, the timing is extremely important. If banks are reviewing internal currency processing procedures, it's often because regulators have signaled the potential for market-sensitive activity. And when the banks start preparing, that's when smart investors start paying attention. But here's where it gets even more interesting. Chase Bank's internal systems reportedly updated certain foreign currency data structures in late 2024, coinciding with the Central Bank of Iraq's public statements about currency reform. This kind of synchronization doesn't happen by accident. It suggests both sides are aligning technical systems for potential large-scale transitions. Whether that's a revaluation, redenomination, or digital integration, one thing's clear. Something is moving beneath the surface. So before you dismiss the noise, understand this. Every major global currency shift in history, from the Kuwaiti dinar reset to the euro adoption, began with subtle operational signals exactly like these. If you're here to understand the truth, stay tuned because the next few minutes could help you see the full picture before anyone else does. Now, as we look deeper into this unfolding story, you might wonder what kind of limits or controls are being hinted at when it comes to the 2025 dinar revaluation. Well, according to several financial data reports circulating in both Iraqi and U.S. financial networks, there's growing discussion about how exchange limits could be structured if a revaluation occurs. What that means is simple. If the Iraqi dinar's value is officially adjusted upward, banks might temporarily cap how much can be exchanged per individual or institution during the early stages of the revaluation period. This isn't new. It's actually a protective measure used in currency reforms to prevent immediate market chaos, money laundering, or speculative dumping. Chase Bank's insider alert that surfaced through leaked memos reportedly mentioned the need for customer identity verification and staged exchange rollouts. That phrase alone is enough to make anyone realize how serious banks are taking this potential shift. These internal documents highlight the possibility of pre-approval requirements, meaning not everyone will be able to walk in and exchange large sums instantly. This is why preparing early, having accounts verified, keeping records clean, and understanding compliance requirements could make all the difference if or when an RV is activated. But beyond the bank logistics, the real question remains, why now? Why are these institutions suddenly tightening internal systems and reviewing compliance models around a currency that for years many dismissed as speculative fantasy? The answer might lie in Iraq's current oil-backed stabilization program and the IMF's renewed interest in Middle Eastern financial harmonization. Iraq's GDP growth is projected to rebound as oil exports stabilize and non-oil investments increase, creating a foundation for stronger currency valuation potential. Combine that with the United States Treasury Department's ongoing involvement in monitoring Iraqi currency transactions, and you get a clear pattern of global coordination. Add to that the fact that Iraq has recently increased its gold reserves and digitalized large parts of its payment systems. Both are classic pre-revaluation indicators. And while many skeptics still argue that Iraq's political landscape remains unstable, the counterargument is that even during internal challenges, financial reform can move forward under international supervision. Just look at how Vietnam, Kuwait, and other nations handled controlled revaluations under external observation. If Iraq follows a similar blueprint, we could see gradual but significant appreciation over time rather than a one-day massive spike. And yet, the most intriguing part of the Chase Bank insider discussion is not just about limits or alerts. It's about timing. Financial data timestamps show that system updates occurred at intervals that align suspiciously close to regional economic meetings between Iraq, the U.S., and Gulf Cooperation Council members. This raises one big question. Are these technical preparations being coordinated at a higher level to prevent financial shock? The evidence suggests yes. That's why you must keep watching, keep researching, and most importantly, don't make emotional financial decisions. The real winners in revaluations are not those who move fastest, but those who move smartest. So take a deep breath, stay informed, and let's move to the most crucial part. What experts believe is next. So what happens next? If you've stayed with me this far, that means you truly understand the gravity of what could unfold in 2025. Experts are now dividing into two camps. One side believes the Dinar RV will be a slow, strategic rollout with limited daily exchange caps and verification layers. The other side believes a controlled overnight adjustment could occur, catching the market by surprise but delivering immediate valuation change. Either way, preparation is the key word, and that's where investors often fail. If you think banks will simply announce the RV is live and open doors for instant exchanges, think again. Financial institutions operate under strict regulatory frameworks, especially with the Patriot Act and global anti-money laundering standards. Chase Bank's insider notes have repeatedly hinted that any revaluation event would involve thorough source of funds documentation, multi-tier verification, and account holding limits. So if you haven't already, now is the time to ensure your banking documentation, identification, and currency purchase receipts are fully organized. Because when the window opens, even if only temporarily, you won't want to be stuck on the sidelines due to incomplete paperwork. But let's think beyond logistics. The potential Dinar RV is not just a currency event. It's a psychological and geopolitical event. It could shift how investors view developing nation currencies, how oil-rich economies leverage their reserves, and how the U.S. dollar interacts with emerging financial systems. Remember, Iraq's entire reconstruction economy is being backed by increasing oil production targets and new digital trade platforms. If the country's value rises on the global scale, the ripple effects could affect everything from forex markets to commodity prices. And that's why major U.S. banks are quietly adjusting. They're not betting on hype, they're preparing for possibility. In the background, artificial intelligence models used by financial analysts are already predicting that if Iraq successfully reaches full compliance with international transparency standards, the probability of a managed revaluation within the next 12-18 months rises dramatically. That's why you keep hearing about insider alerts. They're not promises, they're signals. And every signal has a pattern. So if you truly want to stay ahead of the curve, stop chasing social media rumors and start tracking verified financial updates from the Central Bank of Iraq, the IMF, and regional monetary meetings. The truth is, 2025 could be the year Iraq takes a massive leap toward monetary sovereignty, or it could be another cycle of delayed reform. But either way, Those who are prepared mentally, financially, and strategically will be positioned to take advantage of whatever outcome arrives. And if this video has given you even a fraction of insight or motivation to think differently about your financial future, then make sure you hit that like button, subscribe to the channel, and turn on notifications, because every update I share could be the one that changes how you prepare.